Hey, Bernardo Wealth Extended Family. Want to get in touch. Obviously, the markets have seen lots of volatility over the last couple trading sessions, lots of news, headlines, and the R word has surfaced, recession, kind of from all the major news and media outlets. So I want to address that today, talk about just a few things that are happening, and then ultimately go to investor behavior. What do we do when we start to see this type of volatility? So just to break it down, I've been talking, if you've watched some of my videos in the past about unemployment, saying I think unemployment is what we have to pay closest attention to. If unemployment starts to move up, that may be a signal for some bigger issues. And we're seeing that right now. I think that's a lot of why the market has kind of gotten to the point it's at right now. And the R word of recession is on the minds of lots of investors. From a market portfolio construction perspective, this is why I kind of continue to say we've planned for this. When we go through planning, what are we doing? We're looking at cash flows for you and kind of horizons for investments. And I've talked to a lot of clients recently about market performance as it relates to their plan. If we plan and project a market rate of performance, we know that we're not going to get it year in and year out. We know there's going to be years where we see big growth. We know there's going to be years where maybe we fall into recession and market values actually come down. Over time, over 3 and 5 year periods, we expect those rates of return to normalize and produce returns. So as we think about portfolio construction, what is important to remember as we sit in a period of uncertainty, as we look at the NASDAQ now down 10% in correction territory, as we start to think about some turbulence in the markets? Well, what we think about is that planning and saying, if we've done our job correctly with you, which I have a high level of confidence that that is exactly what we're doing, we haven't allocated dollars that you're going to need in the next 2 and 3 and 4 years into the stock market. We've allocated those dollars way out to say, hey, we don't need this money for the next couple of years to sustain our lifestyle, to sustain our retirement, to use those funds to maybe buy a house or whatever we're allocating towards. So I think that's the biggest thing as we go through these periods. We've planned for this. This is a period that's, again, it feels uncomfortable. The emotion of it, you can't deny. But if you come back and say, well, these are longer term asset allocated dollars in the market, that's what we need to kind of keep our focus on. So we'll continue to be in touch here. If we think things need to happen, from a portfolio perspective, we're going to do them. A lot of things we've kind of planned and prepared for and all. But I just want to kind of relay that message to you. We've been here before. We've planned for volatility for sure. We wouldn't be doing our job if otherwise. So just really a message to say, let's stay disciplined. Let's have confidence that we've planned for this and we've built your portfolio to last through seasons of time like this. So as always, this is where we need to produce our most value to you. If you have questions, if you want to have conversations just to kind of reiterate this and feel comfortable, by all means, please reach out. That's what we're here for. And what we care about the most is you kind of sleeping at night through periods like this. So thanks, and we look forward to talking to you soon. Take care.